What's going on, coin traders? Thanks for joining me. Going to be looking at Algorand ALGO on that ticker. So one of the big things that's happened recently is that we've actually broken the daily structure. So we have now formed a new daily lower low compared to the previous low, which was sitting back at 2330. So despite the price right now sitting above that and having a pretty decent close with this nice long lower shadow on this candle, we do still have a change in this overall pattern, which does mean that we're likely going to experience a little bit more bearish pressure, or at least the likelihood of a pullback continuing does start to favor a little bit more, and we are starting to get a higher likelihood, which does mean that if you are in a long position, the risk of further downside is starting to increase. So we are going to dive into some of the longer term charts today, and then at the end switch over to some of the shorter charts to figure out what we're going to expect, whether or not we'll actually see a bounce up to these exponential moving averages and then roll back over, or whether or not we can actually see a little bit more maintaining of some upside pressure. So if you are enjoying this type of content and video, you know what to do. Smash that free like button and the subscribe if you haven't done so just yet. And so do want to flip on over to Twitter, because 2 days ago, or actually yesterday, posted a chart. And this is the 2-day log scale, which we will look at in a second. Basically wanted to know what everyone was seeing, and we're going to talk about that, which is kind of why I posted it. So you can kind of make a comparison if what you are seeing is what we're going to cover in the show today. And so have been posting a lot of updates and comments and things like that over on Twitter. So make sure you are dropping me a follow at coin_trades is the handle, and we will catch you there over on Twitter. So now I do want to start off talking about this daily chart a little bit more. Like we mentioned in the show, we have broken structure, especially after forming a new lower high once we rejected just below the 30-cent line. So that was expected and anticipated. And so now, especially since we have combined with a lower peak, basically, so we did get our peak when we did hit almost about the 30-cent line. But unfortunately, we did see a pretty big retracement, and prior to the current flush anyway, we actually were maintaining support on top of the 26-period exponential moving average. So let's go ahead and just look at that. So off the low from the end of last year, we did see a nice rally pulling back, kicking off the 26, another nice rally pulling back, kicking off the 26, and even on this most recent attempt, we were actually maintaining it for 3 daily candles until we ultimately broke it, which then found support on the 50-period in terms of a close. And so after a rally that did make a lower high, we did pull back and actually break below this 50-period EMA now. So we did lose 2 big key support levels, both the 26 exponential moving average as well as the 50-period EMA. And especially in this chart, you can see that there was a prolonged period of several days where we actually did get stuck up in between this zone between the 26 and the 50 until now we are actually substantially below those levels. So if we turn back on the 12-period EMA, you can see that this was relevant too. And essentially what happened is that if we draw a line that encompasses the bottom of every exponential moving average, you can see how we were just finding support on the very lowest level of these exponential moving averages. So let's go ahead and turn off all the EMAs right now, and you can see what I'm talking about, how we actually had an initial resistance before we started drawing. We did find an initial support, and then we also found support, finally finding support, and then ultimately breaking it, right? But what happened is that if we turn the exponential moving averages back on, we can actually see that this did flip from support on the 12. Then we found the 26 and then ultimately the 50. And that's kind of why it did run along this bottom level. So the ultimate lowest point of support ultimately did break. And that's why now we are back below these exponential moving averages, showing that the path of least resistance is still to the downside. So even with a little bit of upside pressure, we're still going to have a lot of resistance on these exponential moving averages, which now are going to be making a little bit more of that bearish formation and cross. So if we want to go ahead and pull up a Fibonacci based on this retracement and pullback, we can see that one of our big targets is the 38.2% retracement. It's kind of hidden behind these candles. But essentially, if we do look at the chart, then we can see that that's pretty much the big point where these exponential moving averages are going to come to. So even on a nice little bounce here, this is pretty much going to be the level that we are expecting, which is right around the 25-cent psychological. So that in and of itself is going to be another extremely big resistance point that we're going to be looking at. So I would anticipate, even with a little bit of an oversold or a little bit of an overextended bounce, since we have been retracing for so long, that we won't really get above the 25-cent psychological on any type of upside movement. So if we actually zoom out a little bit and go ahead and turn the volume off, then if we do look at all of these levels as well, 25-cent level has been previously relevant in terms of big resistance, so likely since we have now dropped back below that level, along with the exponential moving averages as well as that Fibonacci target, I do think that 25-cent psychological is going to be our maximum upside point at this time. Anyway, unless a lot of things happen to shift on some of the shorter term charts, but just based on this current daily chart right now, we are looking at that being a big upside target level. And so if I do pull up the VPVR volume profile visible range right now, you can just see how we are going to get stuck up. And the big point of mass now is going to be just below that. So if we do look, big point of mass is going to be about 24.5 cents, but it does start to taper off all the way up until about the 26 line. So extremely big resistance point up overhead, especially since it has been big technical targets as both support and resistance previously. Now, one of the things that we've talked about on the show before, and kind of one of the reasons I wanted to post that tweet again as well, is that if we actually flip over into the weekly log scale, then I do want to point out a few distinct things. So obviously we do have the 25-cent line, but we're going to go ahead and delete that for now. And so we've actually been talking about this move, retracing or pulling up and actually rejecting from the 26 on the weekly and being able to pull back and set that higher low. So what are the targets for that higher low on the weekly? Well, if we actually look all the way to the left here where current price points is, where we actually bounced off back in November, the beginning of November of 2020, that's going to be a very big target point as well for support, especially since prices are still above that. So the low is 22.25. So I would actually expect that to be a significant level. In addition, below that, if we look at some of the weekly closing levels of support, we would be looking at 20.33 and then dipping down to about 19.16 before kind of falling back to that 18-cent level. And then obviously below that would be the low right at about 16 cents. Now, so if we do want to go ahead and zoom in on the weekly and talk about a Fibonacci retracement on this as well, we can see that where we align based off of the low that we experienced at the end of last year, all the way up to the current trend high right at about the 30-cent line. The current weekly candle right now is pretty much finding support on top of the 50% retracement, which like we've said isn't necessarily a Fibonacci level, but the level for that is at 22.97. And in addition, we did see a slight wicking down below 22.40, which was another one of our big relevant price levels. So effectively, there's no guarantee we could go lower. But if we do see slippage down to the 61.8, that would be 21.33. And in between this zone is our 20.33 level as well. But to the downside below that, the 78.6 is aligning pretty well right now with the 19-cent level, especially since the 78.6 does come in at 18.99. And so especially after a big bear market on the typical bounce, we actually do retrace quite a bit. So I am still thinking that the 78.6 could be a pretty big target in terms of downside for finding a weekly higher low. Now, obviously, we would have to see a lot of bearishness out of the rest of the crypto space, but because we actually are seeing a little bit more bearishness out of the stock market and a lot of economic factors around the world are starting to worsen, it's not unreasonable to think we actually could be retracing in the near future down to the 78.6 target. So if I go ahead and look at the percentage pullback, that would represent down to the 19 cent about another 20%, which actually isn't necessarily that much given the current condition and state of the market right now. And obviously it is quite a big pullback, but we've actually seen pullbacks like that happen in one day. So overall, I think given the current conditions, the fact that we're losing structure on the daily chart as well does mean that we're going to need to start eyeing which one of these lower supports is ultimately going to end up holding in order to see the future bounce play out if in fact it does. Keep in mind though that the farther we do pull back does reduce the likelihood of actually being able to rally and break these new highs, therefore setting a new higher high. So the farther and longer we pull back does start to mean a longer period of accumulation down in this overall zone. Personally, for me, I'm still not under the impression that that's a bad thing right now, since we do have a lot of maturing in the space left to do, and I do welcome any opportunity to see accumulation opportunities like that. If we do go ahead and look at weekly resistance, though, do have to make note of the huge upside resistance line that's been proven, confirmed, and tested. So big level of support this whole period going from basically the summer to the fall, right before the FTX pullback. So now on this rally, 3 consecutive weeks, we were unable to see the bulls form a close on top of that level. So naturally, that is why we are expecting our weekly pullback like we have been talking about for a while now. And that's why we do anticipate setting a higher low compared to bottoming out just below the 16 cent line at the end of the year. We go ahead and flip over to the 4-hour chart right now, still maintaining a very nice downtrend for the 4-hour. That's confirmed. So we are going to be looking at testing our low, finding a higher low on top of 22.23. Anything below that will continue to confirm this downtrend. But right now we could be looking at a little period of consolidation accumulation before seeing the next pullback to the downside. As you can see on a lot of these 4-hour charts, we do have a little bit of an extended period where we do get the exponential moving averages to pull back and actually get prices running up. So that's why we could be looking at a little bit more upside gain. And we talked about the 25-cent psychological being a target, and realistically, I'm not even sure we'll be able to get that high. If you can see looking left, anytime we did dip down below the 25-cent level, prices had been pretty quick to get bought up from that point. So the fact that now we are substantially below it, I don't necessarily think we're going to see a big bounce coming, especially since this whole area that was so supportive as a zone has broken and now should be resistive as a zone. Tomorrow morning during the day, we do have an announcement that Coinbase is going to be shutting for maintenance. Basically, it's going to be all day, so it's going to start at 9 a.m. Pacific time, and it's expected to go about 8 hours to complete. So effectively, all trading on Coinbase is going to halt for tomorrow. So I do expect a bit of an impact on the overall crypto space as well, and that's not necessarily going to be in the bullish direction, especially since we are now in shorter-term trends to the downside. So flipping over, looking at the 15-minute chart, getting stuck up right now at about 23.40. So if we can break on top of that level, maintain it as support, good chance of seeing upside up to that 24-25 cent target like we talked about. Otherwise, we are going to see this level be resistance and actually pull back to test some of the lows. But we are going to be coming in at about the 23 cent. And then if that does fall, then we're pretty much going to see a pretty nice run easily to the downside, testing about 22.25. So yeah, unfortunately not the most bullish of setups right now, but we had been expecting it and talking about it for a while on the longer term charts just because we had seen so much bullishness and upside, and we did need to ultimately pull back and confirm that higher low, which is what we're targeting and going for right now with Algorand and also the rest of the crypto space as well. But yeah, so that is going to go ahead and wrap up our update on Algorand. Do let me know your questions, thoughts, issues, disagreements, all that stuff down below in the comments sections. I do love getting back to each and every one of you. Appreciate you watching to the end. Please hit the thumbs up, like, and subscribe button if you haven't done so and you did enjoy this type of video. Do appreciate all the continued love and support. As always, does mean so much. Stay safe, take care, everyone, and I'll catch you back in the next video.